Hi everyone, this is a technical analysis on USDJPY. Let's start with some fundamental background first. In the US, the Fed left interest rates unchanged as expected at the last meeting, with basically no change to the statement. The dot plot still showed three rate cuts for 2024, and the economic projections were upgraded with growth and inflation higher and the unemployment rate lower. The US CPI beat expectations for the third consecutive month, while the US PPI came in line with forecasts. The S&P beat expectations across the board, although the average hourly earnings came in line with forecasts. The USSM manufacturing PMI beat expectations by a big margin, with the prices component continuing to increase, while the USSM services PMI missed, with the price index dropping to the lowest level in 4 years. The US retail sales beat expectations across the board by a big margin, with positive revisions to the prior figures. The market now expects the first rate cut in September. In Japan, the BOJ finally exited the negative interest rates policy as expected at the last meeting, raising interest rates by 10 basis points, bringing the rate to a target between 0.0% and 0.10%. Moreover, the central bank scrapped the yield curve control in the ETF purchases while maintaining QE in place. The latest unemployment rate missed expectations, although it continues to hover around cycle lows. The Japanese PMIs improved further for both the manufacturing and services measures, although the former remains in contractionary territory. The latest Japanese wage data came in line with expectations. The Tokyo CPI, which is seen as a leading indicator for national CPI, came in line with expectations. The market expects another rate hike from the BOJ this year, although the timing remains uncertain. Now, the daily chart, we can see that USD/JPY finally broke out of this consolidation following another hot US CPI report. This breakout opened the door for much higher prices with no real resistance in sight until the 160 handle. From a risk management perspective, the buyers will have a much better risk to reward setup around this previous resistance now turned support, where we can also find the confluence of the trend line and the 38.2% Fibonacci retracement level. The sellers, on the other hand, will want to see the price breaking lower to invalidate the bullish setup and position for a drop into this next major trend line around the 146 handle. On the 4-hour chart, we can see that we have another trend line here where the buyers can lean onto in case of a pullback, where they will also find the 38.2% Fibonacci retracement level for confluence. The sellers, on the other hand, will want to see the price breaking lower to position for a break below this 151.92 support zone with a better risk to reward setup. On the 1-hour chart, we can see that the price has been divergent with the MACD, which is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, it could be a signal for a pullback into this trend line, where they will also find the Fibonacci retracement level. The price will need to break this low, the most recent swing low at 153.87 to confirm the bigger pullback, as the sellers will likely pile in more aggressively to target the 152.50 level. On Thursday, we get the latest US jobless claims figures, while on Friday, we conclude the week with the Japanese CPI.